All right, today we are jumping into a story that's basically written in the lines of a stock chart. It's a classic pattern, but this one is on another level. We're going to unpack the absolutely wild ride of PlugPower, not just to look at the stock, but to really understand how analysts read the signs and how they try to figure out what's coming next when a stock is flying this close to the sun. So let's get into it. So let's just start with this. 172%. In just 3 months. I mean, that's the kind of number that makes everyone, and I mean everyone, sit up and pay attention. But a number like this also raises a huge question. What in the world is actually going on here? That's what we're going to figure out. So first things first, let's just trace the path of this thing. The price movement alone tells a pretty dramatic story. Calling it a rocket launch is honestly not much of an exaggeration. Check this out. It all starts pretty quietly back in July, kind of building a base around $1.40. Through August, it starts to wake up, pushes toward $2. In September, it sort of catches its breath, trades sideways for a bit. And then, bam, October hits. We're talking about a massive, straight-up explosion in price, all the way to $3.81. This is what a parabolic move looks like in the wild. It's almost a vertical line. And, if you just looked at that chart, you'd come to a pretty simple conclusion, right? The analysis puts it very plainly. The overall trend is extremely bullish. And if our story stopped right here, you'd think this thing was only going in one direction. But as you know, the real story is never that simple. Right, because just like a race car engine redlining down the final stretch, a stock moving this fast and this hot starts to show signs of serious strain. And that's where we're going next, learning how to spot those warning signs. Which brings us to the single most important question you have to ask in a situation like this. Yeah, the speed is thrilling, but is this whole thing about to overheat and blow up? To get an answer, we have to pop the hood and look at the technical data. Okay, think of this as the dashboard inside that race car. These are the gauges analysts stare at, and man, are they flashing red. Look at the RSI. That's kind of like the tachometer for price momentum. Anything over 70 is considered overbought. This one's at 83. Then you've got the CCI, another momentum gauge, sitting at a wild 209, and on top of that, the price is literally pushing against the ceiling of its Bollinger Bands. The bottom line? Almost every critical gauge is screaming that this thing is pushed way beyond its normal limits. So you hear this word overbought a lot. What does it actually mean? Well, first off, it is not a comment on the company itself. It's a technical signal. It just means the price has gone up way too far, way too fast. It's like a sprinter at the end of a race. They might just be running out of gas. It's a sign of potential exhaustion in buying pressure, and it suggests the stock might need to take a breather or even reverse course. So the price tells us what happened. But to understand why it happened, we need to ask another question. Who is doing all this buying? For that, we have to follow the money. And that means we need to look at the trading volume because it leaves a very clear footprint. And wow, this chart says it all. From July through September, you're seeing a pretty normal average of around 60 million shares traded each day. But then in October, on one of the biggest days, that volume absolutely exploded to nearly $500 million shares. Let me say that again, $500 million. This is way more than just a little extra interest. It's a completely different kind of party. This is the classic signature of what analysts call speculative trading. It's driven by the thrill of the chase, people jumping in because the price is moving, not necessarily because they've done a 10-year analysis of the company. Now, this creates incredible upward pressure for sure, but it also builds the rally on a really unstable foundation, because the same crowd that stampedes in can stampede out just as fast. Okay, so we have this massive contradiction, right? On one hand, a rocket ship trend that looks unstoppable. On the other, a dashboard of warning lights all flashing at once. So the big question is, where does it go from here? The analysis breaks it down into 3 possible scenarios. But before we get to the scenarios, we gotta map out the battlefield. These are the key price levels that everyone is watching. Think of support as the floor, the price level where buyers have shown up in the past. That 302 level is absolutely critical. And resistance is the ceiling, where sellers tend to show up. And as you can see, we're bumping our heads against that ceiling right about now. So with those battle lines drawn, here are the 3 ways this could play out. First, the bullish path. The buyers win, they smash through that 395 ceiling, and that could kick off a whole new wave of buying, maybe up toward 450. Second, the bearish path. The sellers take over, That 302 floor gives way, and you could see a really sharp drop as all those speculators run for the exits. And finally, the neutral path, a stalemate. The stock just chops back and forth between the floor and the ceiling while the market tries to figure out what to do next. So when you weigh all this, the incredible momentum against some very serious technical warnings, what is the final takeaway? What's the bottom line here? This entire complicated story really boils down to this one simple conflict. It is a tug of war. On one side of the rope, you have this incredibly powerful parabolic trend. And on the other side, you have all this data screaming that the buyers are getting tired. Potential exhaustion. It's basically the irresistible force meeting the immovable object. And because of that epic battle, the source analysis ends with a very direct, very unambiguous piece of advice. Exercise extreme caution. Why? Because this isn't a normal, stable uptrend. It's a high-risk, high-volatility environment driven by speculation. And that can turn on a dime. And that really leaves us with a final question that's so much bigger than just this one stock. It's a question for anyone watching the markets. When you are staring at a chart that looks like a once-in-a-lifetime opportunity, but all the warning signs are flashing, what do you do? In a market that loves extremes, how do you personally balance that incredible pull of opportunity with the hard reality of risk?